Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they really struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the Deferred Sales Trust, is an amazing way for you to create and preserve more wealth, exit highly appreciated assets, defer millions of dollars of capital gains tax. Again, so you can create and preserve more wealth or help your clients, friends, or family do the same. My name is Brett Swarts, and I'm founder of Capital Gains Tax Solutions. And we're on a mission every single one of these podcasts to bring some of the best real estate, financial, wealth, and business minds in the world, where they can share their ideas, deal stories, tactical wisdom with us so we can all create and preserve more wealth. So I'm excited about our next guest. Before we go there, by the way, we're also streaming on Expert CRE Secrets as well. So all of our commercial real estate experts out there, or investors that are listening, so glad to have you listening to us. I'm excited about our next guest. He's out of the great state of Arizona. He is on a mission to help you grow your wealth, particularly through ATM and cash flowing businesses. And he's going to share his story with us and the advantage that he brings with over 40 years of business development, financial services experience, and an executive team that has built alliances across the industry to help you grow. And something that we all love, cash flow, but guess what? Sometimes it's from these sources that perhaps we didn't think about, right? And ATMs perhaps are one of those ones that I'm curious to learn about, and I think you are too. Please welcome to the show with me, Michael Guthrie. Michael, how are you doing?
Fantastic. Thank you so much for having me, Brett.
Excellent. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
So, and it's a wide range of things also. Me and my wife started an ATM company back in 1996 on her credit card. We bought our very first ATM machine, installed it in a nightclub in San Francisco, drained our bank account of all $2,000. And that club, thank God, it was only open on Friday nights and Saturday nights. Otherwise, we would have run out of money. And we would actually go to the club on Friday and Saturday night and watch ourselves actually make $2 at a swipe, just so we could actually make sure that the business was actually viable. And at the time, I was still working in a hospital as an MRI tech. And that's what I did for a spell while we started to grow that, what we called our side hustle at the time.
Amazing, Mike. I love that. The fact that you guys were hands-on and you weren't even sure. You drained the bank account. You're working the regular job. And by 19 weekends, you weren't just partying like the rest of them, although you probably have a good time there at the club as well. You were actually watching people do it. So on average, Mike, I'm curious, how many swipes would happen on those first few months or first few nights?
So you'd probably see 20. The interesting thing is we would watch and you do 25 to 30 swipes a night. And every time there was a swipe, my wife would be like, we could have another drink. And it was sort of weird, but because we were so new and so young. I think I was 27 or 28 at the time when we started that business, this business. And it was a completely different time, something we weren't used to doing, and actually being able to see money being generated. We were used to working for other people and letting them generate the money and pay us a weekly paycheck every Friday.
Yeah, that is so cool. Yeah, it's very tangible, right? When you see it live right there and you're having a good time and you're having a few drinks. Very cool, Mike. Before we dive into our topic at hand, which is building an ATM cash flow business, I want to take one other step back, Mike. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So I'm curious, what would you say the one or two strengths that you believe you were given, and how does that help how you help and bless people today?
I think one of the gifts I was given is I'm not afraid to talk to anybody about anything. So for me, connecting people and creating relationships has been the biggest. It's the biggest barrier of entry for most people, because they're afraid to actually go and have a conversation with somebody they have no idea who they are or whether they're even interested in what you're bringing to the table. And my thing is, you have to go through everybody. And everybody could be a no to get to your yeses. So for me, the more contacts I can make and the more relationships I can form and forge, the better off I'm going to be long-term. Whether or not we do something today, maybe we do something in 2 weeks, or maybe we just become friends and have a barbecue. But creating those relationships is the biggest thing that a gift that I have that I bring to the table for most for most of my life.
That's great. That's great. Not afraid to talk to anyone about anything, and building relationships makes sense. Now let's dive into the topic at hand, which is building an ATM cash flow business. By the way, if you want to start right now and take action, if you already like what Mike is saying, go to cypressadvantage.com. That's cypressadvantage.com. So Mike, what's the number one secret to building an ATM cash flow business?
I think it's the same thing within any business. It is customer service, because I think anybody can sell you a ATM or they could sell you a car, but it's what happens after the sale that really matters. You want to make sure that you're taking care of their cash, because they're trusting you when they put their cash in that machine that you're going to make sure it gets back to their bank account on a daily or monthly basis, depending on how they decide to set up their operation. So you're building trust, and your word is your bond. And it doesn't matter if you have a contract or not, your word and you doing what you say you're going to do on a day in and day out basis, that's what actually helps really start to grow the business. And that's been one of our biggest pieces of our success is the more we've done well for others, the more they introduce us to more people.
Excellent. So customer service, delivering on what you said you were going to do, regardless if it's in the contract or not, basically living up to what the expectations have been set. I think that's what I'm hearing between the lines there. And
Yep.
then the folks that they're trusting that what they put into the machine, or what they put into the business, is going to actually come back to their bank account with a return, right? And is that a fair summary?
That is a very fair summary.
Okay, excellent. Mike, what is the number two secret to building an ATM cash flow business?
Tenacity. You have got to get out there and actually do it. This is not a job that you can do sitting behind a desk. You have to get in front of people face to face, share your offering, and show how it's going to actually be profitable for the place you're going to put the machine into, so that they understand this isn't just about you getting a commission off a one-off sale. It's about you creating a relationship and helping them grow their business. One machine at a time. For them, it's one more ancillary service that they can add to their already large book of business. 90% of our clients are convenience stores / gas stations, and they have so many different vendors. They don't want to be dealing with every vendor, but if they know that you'll come in, you'll place the ATM machine, you'll take care of it, and they get a paycheck at the end of every month without hassle, you've actually created a profit center inside their business to help them continue to grow what they're doing. So I believe just ensuring that you're bringing a solution to a business and not another issue.
Excellent. So number two secret is tenacity. You have to get in front of people. You have to show the offering. You have to show them what's in it for them, how it's going to be profitable for them, how it's going to grow their business, how it's going to be a long-term turnkey without hassle or a little hassle. You get their check. Not going to be bothering them. It's not going to take them a distraction for them. Is that a fair summary to secret number two?
100%.
All right. And so we have secret number one is customer service. And then secret number two is to tenacity, to, I guess, maybe even execute on that customer service. What is secret number three, Mike, when it comes to building an ATM cash flow business?
Oh, that's a great one. Making sure the machine that you sell them is operable. And if it's not operable, that you're available to either repair it, troubleshoot it, to ensure that it has the maximum uptime. The last thing you want is a machine in there with an error code on the screen, and the customer comes up to it to use it, and they want to pay you $2, $3, $4 a transaction, and it's out of service. So secret number three is making sure the machines are operable and they have the maximum uptime.
Maximum uptime, which means, I guess, just the ability to transact, right? Versus just, people
Absolutely,
walking away and then your $2 is gone forever, right? So you want to make sure that it's up and operating. How do you find, especially in this economy right now, right? Maybe good technicians, even, workers, perhaps that's a challenge for you or others, right? But how have you found the ability to make sure you can call and have somebody, fix it quickly?
There's back when we started this business in 1996, 97, there were no technicians. You were the technician. So if you had we started a route in the Bay Area of California, I couldn't be in San Francisco and Sacramento and San Jose in the exact same day. So you started to learn efficiencies on walking your merchant through actually fixing it. So you didn't, and then once the industry started to bloom, if you will, or mature, technicians started popping up all over the place, and they would solicit you for business, which was even better because when we would train somebody and then they would leave to go start their own business, now we were training another person. But we decided literally about 10 years into the business, we would outsource all of our service to companies that specialize in the service, and we'd give them a guaranteed monthly income regarding servicing ATM machines so that they would prioritize our stuff. That way customers were always happy because nothing's worse than Friday night at like 6 o'clock when it's the maximum transaction time. Your machine goes down and you don't get a technician until Monday, like the national companies would provide. That's the kind of service they did. We would come out Friday afternoon, Friday at 7 o'clock, and we would fix it. So then you would be up all weekend, but you had to train people. And then once we got people trained and the industry matured, there were technicians all over the place begging for work from you so that you could actually provide that service for your clients.
Okay, now let's get tactical. So we talked about the 3 secrets to building an ATM cash flow business. Now I guess maybe let's get behind the numbers here a little bit more, right? So in general, someone has, $1 million, right? They just sold a business, they just sold a piece of real estate, they're refinancing their house because they want to get entrepreneurial, and they're like, okay, I'm looking at real estate, I'm looking at crypto, I'm looking at stocks, or I'm looking at this ATM business with Michael. So Michael, make the pitch, if you will, or the argument or the persuasion here for why right now in the ATM business, and what kind of numbers. You work hard, you have tenacity, you have great customer support, you have systems in place. Why ATMs? What kind of returns are we looking at?
That's the $1 million question. If you put an ATM machine in a convenience store or a gas station, you can probably figure you're going to do 300 to 400 transactions a month. Margins have got a little slimmer, so the merchant, the owner of that store, if you place the machine, is probably going to want anywhere from 30 to 50% of the surcharge revenue generated at that machine. So say you're charging, like mine are charging $3.99. So just say $4 times 400 transactions, that's $1,600 a month. 50% of that's $8. So you're giving away $800. And then you have your time, you have your cost of cash, and you have your insurance that's going to come out of that $800 of revenue that you have. So at the end of the day, one location will probably make you $300 to $400 a month. But think about it this way: the machines are only costing you $2,200. So if you're making $400, the machine's $2,200. It takes you about 5.5 months to pay off that piece of equipment, and then it's nothing but cash flow and positive cash flow. They're going forward on a per machine basis. So 99% of your revenue depends on where you place the ATM. If you place the machine in a store, like a nail salon, for instance, that's going to do maybe 100 transactions a month, maybe the economics between you and the merchant aren't going to be the same. But then again, you don't have the amount of cash outlay for loading the ATM because it's got a less of a volume. But it's all about it. It's like anything in real estate. It's location, location, location.
Okay, great. Let me make sure I caught that because that was a lot and that was great. I love how you packed all that content in here. So, all right, I have $1 million and I just want to start the first one. I find an amazing location, cash, high traffic convenience store. And let's just say it does 400 transactions per month at $4 is the surcharge, right? That's $1,600, but I got to give maybe 50% of it away to the owner of the property or whoever's leasing it out. So now my $1,600, right? 4 times 400 is $1,600, cuts in half to $800. Of that, I got to pay for my time, the insurance, the maintenance, whatever it might be. And so I'm maybe netting $300 for that machine. And that's when you say, well, it costs you $2,200. So we take the $2,200 and divide that by 5.5. That's essentially going to pay off the machine. Go ahead, Mike. You want to add to that?
Correct. That was about a $400 a month net profit.
Okay, $400. Okay, so a little bit higher. So about $400 net profit on 800. So about 50% is expenses and insurance and taxes or whatever else, right? So my net 400, then I'm gonna take the 2,200 divided by the 400, it's about 5.5 or so, right? That makes sense. And now the machine's paid off, and now that baby is cash flowing 400 a month. And so do the math. I do that 5 times, right? Now was
Yep.
that 2K a month? Is that right?
Correct.
Yeah, 2K a month. Okay, good. All right.
On 5 machines.
Now, yeah, and then I'll do that 10 of those, then that's 4K a month. I think I did the math right?
Yep.
And then yeah, so that's the idea. Is that a fair summary so far?
That is fair summary, because then if with 10 units, you're into those units about what, $25,000, and and you're making 4K a month. That's a fairly decent return on your capital.
Absolutely. Now, how long does the average machine last in a lifetime?
Well, they amortize them over a 5-year period. I've been doing this 27 years, and we still have machines that have been in the ground for a little over 15 years. So most of these units don't break down. That's the beauty of it. The average service call per ATM machine across our portfolio, and we have a little over 8,000 units out there, is less than 1 service call per year. And you're going to know right out of the gate when you install it if there's an issue. Most service issues are created by a machine being dropped or not installed correctly, or taken out of the box correctly, and they've dropped the machine. So you're going to have a service call in the first 30 to 90 days. Other than that, those machines are fairly bulletproof, and they run forever.
Wow, we're talking with...
That's been my experience.
Yeah, absolutely. We're talking with Michael Guthrie, CypressAdvantage.com. That's CYPRESS Advantage.com, CypressAdvantage.com, building an ATM cash flow business. Fascinating, Mike. Fascinating. Now, what percentage of this do you feel like once you've got your, let's say, a year or 2 years in the business, you've got 10 to 20 of these units, you understand the maintenance, you understand the placement, you understand the service technicians to get out there. You can service it yourself. Probably want to do this all yourself. But essentially, you've got 2 years of hustle and tenacity, right? Perhaps at that point, am I able to be passive, or is that just a fantasy for this ATM business? Like, how passive can I really be?
Depends on how active you want to be. The more active you are in the business, the more profitable you can be, and the more inactive, or say you hire people to do your cash loading for you, you just have to factor that into your expense. So maybe you're not making $400 a month per machine, maybe you're only making $300, but then you already have somebody else doing all the work. So then you can truly turn this into a passive run business. I personally, for the last 10 years, have not really loaded any ATMs. I'm more passive, and based on the amount of business that we have out there, our phone rings on a regular basis, and we get accounts added every single week, and we're not even leaving our desk at this point. It's all word of mouth and a wonderful customer service.
Excellent. So you really have made it into a passive machine for you. Now I'm wondering. Now let's transition to the phase of capital gains tax solutions, right? Someone might listen to this and might say, I may or may not want to be the ATM business, but they might be thinking, well, maybe I want to sell my business. Maybe I've gotten to the point where it's truly a business where I can step away, someone could buy it and buy the entire portfolio, right? And you're selling the entity. Now you're faced with maybe some capital gains tax, right? And let's say you're selling the business for $10 million as a whole, and you're about to pay $2, $3, $4, $5 million of tax. I'm curious, Mike, what have you found, or what strategies have you looked at to be able to defer that capital gains tax? And what would that mean to you if you could, sell and defer the tax and even reinvest in another ATM business or other real estate or other things that you might want to do?
It's funny you say that. About 4 years ago, we started investing in multifamily real estate for a tax shelter, and we've taken me off of the payroll at the ATM company, and I became the real estate professional by investing in multifamily real estate, taking the depreciation for myself as a real estate professional, offsetting my wife's active income from the ATM company. So we've actually implemented that strategy quite readily, and it's worked out pretty well. I haven't paid federal income tax for 3 years. And we'll see when we get down the road of exiting the ATM company, if that alternative opportunity is still there, if there's other things I need to be doing to offset the capital gains of the sale.
So well said. By the way, that is brilliant, Mike. And if you didn't catch all of that, rewind that again. Some key facts there, okay? And when Mike's saying real estate professional, he doesn't necessarily mean he's selling real estate or he's a real estate licensed or anything like that. What it means is he's basically spending the majority of his time, at least 750 hours. There's a couple different things, but 750 hours is the minimum, and it's not on a payroll somewhere else. That opens up a window for him to become a real estate professional. But his wife is still working in the ATM business, right? And they have regular income coming from that. But because they're filing jointly, check with your CPA, he's able to depreciate the real estate that they bought. And that depreciation not only helps with the cash flow to offset on the real estate they own, but also the cash flow that they're making actively, or that she's making actively right there. It is such a beautiful thing. By the way, you have bonus depreciation this year at 80%, 100% last year. So if you have assets to depreciate, you want to consider, at least if you're holding for the next 3 to 5 years. If you're selling anytime between 1 and 3 years, don't do that because it can come back and bite you. But if you're going to be holding for probably 3+ years, consider a cost segregation study, consider a real estate professional status, check with your CPA. Amazing, amazing stuff. If you want any help with that, you can go to capitalgainstaxsolutions.com. We have all the contacts and opportunities to help you with that. Now, Mike, I want to talk about the capital gains tax. This is the next part, right? When you depreciate, eventually you go to zero, right? You go to zero. So you're depreciating those assets, and eventually, when they go to zero, there's no more depreciation to offset over here, right? So guess what? We have a way to defer the capital gains tax on the sale of the business or the real estate. And then when you put it into this trust, you can defer the tax, but then you can reinvest the proceeds, all tax deferred, into a new LLC that can reset your depreciation schedule, all tax deferred. Okay. So we call this the tax flow game. You have the tax flow game, not just the cash flow, it's about tax flow. And you rinse, wash, repeat. And so I'm curious, does any of that resonate with you?
I'm all ears. I'm listening. You are now the sensei, and I'm the student.
Absolutely. Well, I appreciate that. You go to capitalgainstaxsolutions.com. Anyone who wants to learn about that. But essentially, you have a business, primary home, investment real estate. We can eliminate the need for the 1031 exchange. We can move funds outside the taxable estate. You can diversify your wealth using something called a Deferred Sales Trust. And we started out in real estate at a young age in the Bay Area, building houses with my mom and my dad, and we found that the 1031 wasn't always your friend, right? It could be your friend for a long time, but sometimes you have a low depreciation schedule, you have too much debt, you don't have enough liquidity, you have too much active time, and you want to be either retire or just diversify or just wait until an opportunity makes sense for you. And so what we offer is something called a Deferred Sales Trust. Go to capitalgainstaxsolutions.com. It's kind of like the Netflix to the old Blockbuster that you're used to with the 1031. It's really, really amazing. Over close to 30-year track record now. Check it out, capitalgainstaxsolutions.com. That being said, Mike, are you ready for the lightning round?
I am ready for whatever you got coming for me.
All right, here we go. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you make sure to tell yourself to do?
I would have gone a lot harder, faster in the ATM space and gathered up more real estate. And when I say real estate, more 2 by 2 square feet of ATM real estate a lot faster. We did it slow and grow, and that worked out really well for us. We didn't take on any investors, but I would have worked harder to gather more real estate quicker. Excellent.
Question number 2, if you could go back, what's the number one book you've recommended or gifted the most in the past year?
Think and Grow Rich.
Great book. Timeless. Question number 3, what are you most curious about right now?
Where we're heading with the interest rates. That's probably one of the biggest things that keeps me up, because I'm in a lot of multifamily opportunities, and when the interest rate varies, that's going to affect whether or not we're going to continue buying or if we're going to continue holding stuff off to the side.
100%. Those interest rates are really, you could have great occupancy, great NOI, but you can have bad debt or good debt that becomes bad debt because of rate caps in place, and it's really challenging. So 100%
For
really
sure.
interesting to see all that. Question number 4. What's the number one leadership quote or theme that you strive to live by?
That's a good one. I don't. Can you repeat that one more
Yeah,
time?
the number one leadership quote or theme that you strive to live by.
Life's happening for me, not to me. That's got to be one of the big ones that I like to remember. I don't ever want to be the victim. I want to be the one that's out there knowing that what I'm doing is happening for me and that God has his own plan for my life. And I'm just supposed to surrender and continue to step forward.
Amen. Love that. Love that. Love that. Last question. After all your success, helping all the people you've helped and doing all the things you've done, what would you say helps you the most to stay grounded in your values and stay encouraged to charge forward to reach higher heights?
Just continuing to give back. We all learn from others, and whether or not we're at the top of our game, there's always going to be somebody that's going to go a little bit further. And so if we can continue to give back to the younger generation and help them, show them the way and mentor people, I think that's going to pay dividends for everybody long term.
Amazing. Michael, I want to thank you for being on the show. I want to thank you for sharing so much wisdom with us. I want to encourage you to keep using the gifts you've been given, to not be afraid to talk to anybody about anything, right? And to be kind, loving, and build long-term relationships and make an impact for the next generation, to build wealth. So thank you for being on the show. Truly enjoyed it. For our listeners who want to get in touch with you, could you remind them one last time what's the best place for them to find you?
2 places. You can go to my website at cypressadvantage.com, or you can, if you want to just reach out directly to me, my saying for 2023 is be available. So I'm available. And my cell phone number is 509-270-6701. Again, 509-270-6701. Shoot me a text. Let's jump on a call. Happy to help anyone.
Amazing. Thank you, Michael, so much. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, also streaming on Expert CRE Seekers as well, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust or connecting and growing an ATM business is an amazing way for you to create and preserve more wealth. You can go to capitalgainstaxsolutions.com to learn more about how to effectively exit your highly appreciated business, real estate, crypto, stock, really any asset that has $1 million gain and $1 million net proceeds. And you can start to build a plan with us right now. We're happy to work with you. Check out our free ebook there as a gift. And if you want to take even a next step, you can check out our new book that just came out. It's on Amazon. It's called Building a Capital Gains Tax Exit Plan. I hit #1 bestseller. Really proud about that. We have some amazing people like Kevin Harrington from Shark Tank in the book, and a number of other multifamily syndicators and operators, financial advisors. Really, really smart, cool people. I got a couple chapters as well I think you'll enjoy, but you can learn all about how to build a capital gains tax exit plan. Thanks so much for watching, everybody, or listening to this podcast, and we will talk